This is an exciting stock review. It's on Roblox, a game company. If you haven't heard of Roblox, it's because you probably aren't in the right age demographic. People who have heard of Roblox are probably people under 13 or people who actually have kids. Big announcement. I'm in the middle of moving all of the Valuetown shows over to a new YouTube channel created specifically for all things Valuetown finance related. It's going to be youtube.com/Valuetown. That's where you're going to find all the future stuff once we have moved all the videos that way. Roblox is a really exciting company. It only IPO'd this year, which means this is one of those new IPO type companies where it's difficult to value because it's been in public existence for so little amount of time. However, I have to give credit to Roblox. They're actually very good at keeping investors in the loop. Not only do they report quarterly, which is standard for everyone, but they actually report almost monthly, because in their quarterly report, they also give the next month's pretty much accurate estimate. And the month after they release the quarterly report, they release a 1 month essentially report. So there are very few surprises with this company. Given that I consider one of my primary areas of expertise to be gaming, even though this is a new IPO and I personally don't have very many of those, maybe one arguably, in my personal portfolio, this is a company that if it were valued appropriately, I would invest in, because I feel comfortable knowing in general about what gaming companies are all about. And welcome to Valuetown on Weeble. Thank you so much for subscribing on Patreon and signing up for Weeble with the link below. You guys give me these beautiful Jeff stocks. I get shares and you get shares when you sign on. I get slightly better shares. I'm gonna sell my Jeff. I already deposited the money for September in. So today, gonna make some big purchases. Account value is going to be around 4,000 after the deposits go through. I rounded off the VTI and the VXUS, which are the index funds, just the whole numbers. And big news, Alibaba, I have deemed it at the correct level of sentiment to sell out of the FXI at a loss and buy into Baba. Baba is on a run. I actually am back onto Baba on my personal account as well. However, I got into the Baba on this Weeble account after I had taken care of my personal stuff, so I got in basically at the top of yesterday, which is after it run up a lot. It's running up even more though. Makes sense. I still think this company's undervalued. So gonna buy 2 shares of VTI, 1 share of VXUS. Good news, after yesterday, that would be Thursday, October 7th's rally, Valuetown is in the green, up 0.18% after a terrifying and long September. So I feel it would be appropriate to start off just looking at the Roblox website first on what in the world is Roblox. So Roblox is a platform which has a bunch of games on it, and the way that Roblox monetizes is by selling Robux, currency that you can use in these games in order to pick up some sort of advantage. Now, when the Roblox IPO occurred, I actually signed up for an account and I tried out some of its more popular games at the time. Brookhaven RP, Adopt Me, and Tower of Hell, which were 3 of the more popular games at that time. Roblox does have what could be considered a robust metaverse, where essentially they're the platform and there's a bunch of people who create games. Some of them are good, some of them are bad, and then they put them out there. There's a whole world of games for you to play here. The games are pretty much all focused towards the 13 and under crowd, as you can see from the avatars and the types of content here. There's a lot of different games you could play, but the reason why I didn't invest in the Roblox IPO is because, and this may sound a little bit silly, but ultimately you have to like a company in order to invest in it. I played its games and I found that they sucked. When I look at them now, I realize that they are intended for a 13 and under crowd. And I was at one point 13 and under, and when I played Neopets, which is a game that I actually think is kind of similar to perhaps Roblox. Neopets also had a bunch of quick games on it. They were nowhere near as good as Roblox's, to be fair, but at some point, you grow out of wanting to play these types of games, and that's where I'm at. I look at these games and I'm like, wow, this is all trash. But I'm sure they fascinate the intended audience, and they spend a lot of time here, especially during COVID lockdowns where they can't do anything else. So let's go to the Finbox to look at some data, noting that because this is a new IPO, the data on Finbox is quite bad. So this was actually one of the analyses that I had to spend quite a bit more effort on because I had to fill in a lot of the gaps. Develops and operates an online entertainment platform. This Roblox client allows developers and creators to build and publish and operate 3D experiences and other content. This allows an environment where the users create custom games, and then customers get to choose any of these games to play, and if they like them enough, they can spend their Robux to buy stuff in order to gain an advantage in that game. This actually reminds me a lot of Blizzard's Warcraft 3 custom mods, where there was a big metaverse of custom games in Warcraft 3 as well. And that actually spawned a lot of different archetypes. Basically, that was a big miss on Activision Blizzard's side to not be able to monetize that. On the Roblox platform, creators create games, customers play the games, they can spend Robux on those games, the creators get a split of those Robux. There's not that much history for this company. It IPO'd in March 2021. So it has been, how much is this? 1, 2, 3, 4, 5, 6 months, roughly. And the stock has mostly traded flat. But when I say it trades flat, that's a little bit inaccurate. Because what is more accurate is to say that the company had a lot of hype early on and rose up 43%. And then possibly investors started realizing, wait, maybe it's not worth that much. And it has thus slid 30% since then. Also, potentially the earnings reports that have come out have not been reflective of its value. Is this the bottom? Is this a good chance to buy? Well, that's why we do our valuation, to figure out if the market is mispricing this, or maybe it hasn't fallen enough. Roblox has shared 2 quarterly reports so far and has an excellent shareholder letter, which actually came out August 16th, 2021. This was nearly 2 months ago, which means that if I had been on the ball, since I'm not really using any extra data past this, after reading this report, I would have the same information as I had 2 months later. So it's a bit of a shame, perhaps, that I hadn't been following this company when this shareholder letter came out. So here's some highlights of what I found interesting in the shareholder letter. It's very obvious that Roblox emphasizes daily active users, total hours of engagement. This has continued to grow at an astronomical pace, which is why people are willing to invest in a company that isn't making any money. I'm using quotation marks here. Using general accepted accounting principles, it is not making money and has thus a negative PE ratio. We'll go into a little bit about why that's inaccurate. But basically, why invest in an unprofitable company? Well, it's growing. It's growing really, really fast. So Roblox had a really, really good growth period during Q2 of 2020. Why? Because that was when COVID hit. And you know what's impressive? This quarter, Q2 2021, was compared to the last quarter, Q2 2020, that was fully affected by COVID. And the good news is, in 2021, it's larger than 2020. If you can beat that comparison, then you're good to go. Your growth is actually real. So Roblox would like you to take the long view, which means investing because of the many opportunities in Roblox. I mean, every company will say that, right? One of the big questions when you invest in a game company like Roblox is asking yourself, Is their game content going to be compelling once users grow out of it? Roblox would like to say, yes, we still have good content after you hit age 13. There's a bunch of content, some of which is getting geared towards the people who are aging up and are of age 13 plus. And brand partnerships, Roblox is spending a bunch of money in order to do so. They have the Gucci Garden experience, which is showcasing developer tools and lighting technology, which is pretty much just focused on the developer side. And the developer side could create games which are not geared towards 13-year-olds and under. This is obviously something that's not geared towards 13 and under. You've got a virtual party celebrating In the Heights, adapted from the hit Broadway musical from Hamilton creator Lin-Manuel Miranda, and directed by John M. Chu of Crazy Rich Asians. Now, you know what's sad about that? 10 million visits. The kids have no interest in this, and there's just not really that big of an interest from adults in Roblox. Also, Netflix launched their Stranger Things Persistent World on Roblox. While Stranger Things is not a show that's geared towards kids, you could certainly have a kid-friendly version of it, perhaps. Now let's take a look at the supplemental materials that have been provided by Roblox. This is a really important lesson that I wish that I had gotten, this nice little page for when I was reviewing Blizzard stock, Activision Blizzard. Roblox is a company, it's a game company, which has to use deferred revenue due to general accepted accounting practices. So when a user spends $25 on the Roblox platform to purchase 2,500 Robux, that counts as $25 of bookings. However, this revenue has to be recognized over 2 years, essentially. So every single month for 2 years after the initial purchase, $1 is recognized. So they get $2 immediately, and then $1 for the next 23 months, essentially. For accounting purposes, you have to actually break up that money inflow to 23 months. Strange accounting practice. But sometimes, people actually do buy the Robux and don't spend it for a while. So their revenue graph looks really awesome. One of those exponentially growing lines, which is why you invest in this company even though it's not on paper making money. It's really important to look at the non-GAAP measures for Roblox. And looking at the bookings tells a very different story from the revenue. Bookings are the actual amount of money that users spend on the Robux. There was data before the company went public, certainly, and you can see that bookings grew really rapidly into the IPO, and then after the IPO, they've been flat. That's actually very, very concerning. Look at this amount of growth. When people bought in at the IPO, which was in Q1 2021, they may have expected this to continue. But it's been flat. That's really bad, especially for a company priced so highly in terms of price to earnings ratio. In order to deserve that kind of valuation, this growth needs to continue. And thus, I actually believe that this is the most important metric to look at. Net cash provided by operating activities. This is the actual amount of cash that Roblox gets, to deposit into their bank after they get their booking cash and after they spend their money on paying off developers and doing the advertising and all that and running their website and running their servers. They do have a footnote here which notes that these are one-time costs of IPOing, where the second number is actually in 216 range, which, by the way, should actually concern you because that would mean between Q1 2021 and Q2 2021 that they actually lost money. I mean, not lost money, but they made less money. So one of the most important figures for Roblox is daily active users, because essentially the more daily active users Roblox has, the more chances that these daily active users have to spend money on Robux, and therefore the more bookings they get. There was definitely a very large growth. This was a huge growth amount due to COVID, and that has dropped off quite a bit, and that's concerning. Now, it actually goes, I mean, I love that they're providing all of this data, even though if you really look into this data, like it actually doesn't look great for Roblox. So by region, it's split up by how these regions have grown over time. And yes, there was I'm looking at US and Canada here, excellent growth up until about Q3 2020, and then it dropped a little bit. Between Q4 2020 and Q1 2021, that grew, but then this has actually dropped off a substantial amount in Q1 2021 and Q2 2021, even more so in Europe. And their growth is mainly happening in the Asian countries and all other countries out there, all other regions out there. Furthermore, they do have this age group graph where they split under 13 and 13 and over. This is in order to demonstrate that the over 13 age group has been growing. But I did a little bit of further research on this, and I actually found that Roblox's primary age group is under 16. So under 16 is actually the big age group to look at. After 16, people do fall off. So that concerns me on this. As these kids, as these teens grow up, you might see this 13 and over age group fall over unless Roblox succeeds in doing what they're trying to do, which is to make their content more appealing to older people. As you can see from this, it is important to have more daily average users because that gives them a greater chance to to spend this mostly flat amount of money that they spend on the game. Actually, it's been growing, but then mostly flat once it's been around 2020, 2021. So that's Roblox's supplemental materials. And what this tells me is basically I can start painting my picture here. There's two main things going for Roblox. One, in order for Roblox to succeed, they have to continue growing. And they are not currently showing the levels of growth that they were showing when they put their company public on the stock exchange. Number two, related to number one, if they could retain the people that they got on when those kids were like 13 to 16 perhaps, if those users do not leave the platform when they grow to college-aged or adult age, well, that's good for Roblox. But what if they actually drop off? Then their growth could not go up, and instead they might peak and then go down. And one of the big reasons why I fear this is because I lived through such a phenomenon. I played this awesome game called Neopets. Over time I just grew away from it, and I recently checked back on how Neopets was doing, and to no surprise, it was a fad because they didn't keep up with the times, because you grow out of these things. Now, for Roblox, it is different. They do have their own metaverse of all these users creating a bunch of new content, and new content keeps things moving. So the question is, how compelling can this new content be? And like I mentioned, one of the cool things about Roblox, and this is something that is kind of strong pressure for Roblox, I don't know if they're going to keep doing this forever, but Roblox actually reports their metrics nearly monthly. So on September 15th, they published their metrics for August. And because they don't have the finalized versions, they give a very narrow range where the bookings can be, the revenue is, the hours engaged, and the daily active users are. And you can actually see that, great, it actually has been growing since July 2021 when they released the quarterly 2 report. So off of that data, and as well as from help from the created 5-year discounted cash flow EBITDA template from Finbox, these are the numbers I plugged in to the Roblox valuation. I used a cost of capital of 7.5% using, they haven't been around long enough to establish a beta, but I looked up the general game companies out there, and EA, Activision Blizzard, Take-Two, and I assigned Roblox a bit of a higher beta because it's a new company, there's more risk. Came up with a discount rate of 7.5%. Plugged in what I believed their revenue was going to be in 2021, mostly going off of analyst numbers, noting that the Fin box number was actually quite inaccurate here, so I had to dig around for what would actually be right. And then there were analyst numbers for 2022 as well, and then I just scaled down the growth in 2023, 2024, and 2025 while keeping their profit margins mostly the same. With these estimates, as well as the very speculative EBITDA exit multiple of 20 times, also gave a low estimate and a high estimate. I've looked up Activision Blizzard's EBITDA exit multiple that I used. I used somewhere between 15 and 18, and for EA, I used 15. So for Roblox, since it's a fast-growing company, in theory, with revenue growth of hopefully 18, 16, 14, and 12% over the next 4 years, that deserves a higher multiple. I'm saying 20x. This is reflected by looking at Activision Blizzard's and EA's EBITDA exit multiple from about 5 years ago as well, or maybe even 10 years ago when they were newer companies. Their EBITDA exit multiple was still under this, but they didn't have the growth rating that Roblox is projected to have. So off of those numbers, I came up with a fair value of about $70 for Roblox. But I didn't just stop there. I thought that this cash from operations number was really important because Roblox has a lot of deferred revenue that they realize over time. And perhaps investors are looking at the fact that it's unprofitable, but that's very deceptive. Roblox actually makes decent money. So what did I do? Well, because Roblox gives such detailed monthly reports, I feel like the Q3 2021 estimate for this, even though this is a very new process for me, 227 million expected in terms of cash flow from operations that they collect into their bank account. And then Q4 2021, I looked at the difference between Q4 2020 and Q3 2020, and I was like, we'll just keep it the same. So what happens in Q3 and Q4 is really important because this sets the stage for 2022, 2023, 2024, and 2025 to multiply off of. In order to calculate these numbers, I simply multiplied the 2021 expected figure by an additional 25% and then decreased it to plus 22%, plus 18%, plus 15%. I felt like these are pretty aggressive growth rates. And I am very unconfident in Roblox's ability to keep up this growth. But if they did keep up this growth, and then I used a fairly high cash from operations multiple for 2025, I compared this with EA's and Activision Blizzard's cash from operations, I came up with, given that they would be expected to make $1.78 billion in terms of cash from operations, that 30 times that, their market capitalization, their company value should be $53.5 billion. You discount that to today in terms of valuation, and the company would be worth $37.3 billion today. That's because you basically divide that number by the discount rate, 7.5%, the amount that I would want to make investing in a similar business 5 times, which comes up with a fair value of $65. Current price is $70, which means it's overvalued, but not by that much. But you also have to realize that I think it's still overvalued after this slide. And furthermore, if I had done my analysis, theoretically, I would have thought that it was going to be, going down since around here. That would have been a pretty good time to short Roblox. Obviously, you have the power of hindsight rather. And it's like, oh yeah, of course I'd want to short Roblox here. Of course I'd want to short Roblox here. But the point is, now that it's fallen this much, I still think it's overvalued, but not by that much. And it's a very fast growing company, and there's like so many assumptions I made. I assumed that it would grow at still a fast pace. It might not grow at this fast pace, or maybe Roblox will surprise me. Maybe they'll actually do better than expectations. The point is, under this method of valuation, I think it's overvalued by 7%. And under the usual discounted cash flow analysis, I think it's about the right value. So my valuation for Roblox is somewhere between $70 and $65. So 65 to 70, and the current price is just about 70. But I also want to emphasize that I feel like my valuation of 65 to 70 is giving Roblox a lot of benefit of doubt, which means that in reality, I feel like they're probably shouldn't even deserve 65 to 70. I'd want a fair margin of safety before buying, which is to say, if Roblox were actually priced at $40 right now, yeah, I would buy it. But at 70 and even at 65, even at 60, like at 60, I might be willing to take a very small position in it, but certainly not going to buy it at this price, despite the drop. So what's the position that I'm going to take? Well, let's head over to Weeble. Well, the very first stock that I looked into was Activision Blizzard. And looking at Activision Blizzard got me interested in looking at other game company stocks. Those would be Take-Two, EA, Nintendo, Roblox actually also. So while I have not gone really that much into it, because this is a Roblox video, I am going to say that my position on Roblox is going to be, surprise, I'm going to buy EA stock. Roblox is a game company, and in order to value game companies, well, I mean, why not compare them with an already existing game company, especially one that has a market capitalization very similar. So Roblox is currently valued at $40 billion. EA is currently valued at $40 billion. So that's a really close estimate. Roblox is a game that is specifically for 16 and younger. EA's games, they're kind of, they span all ages. So is it fair that Roblox and EA are both valued the same right now? Well, I mean, Roblox makes $1.4 billion a year. EA makes $5.7 billion. That's nearly 4 times. Roblox net income, negative $400 million a year. EA plus $676 million. Noteworthy, again, Roblox does have that deferred revenue thing, but so does EA. It is worse for Roblox, so these numbers look less kind to Roblox, but my point is this. If you buy Roblox, you believe in the growth potential of Roblox. EA, on the other hand, just a very solid company making lots of money and has a reasonable forward price to earnings ratio, 20x. Roblox is, well, I mean, you look at this and you're just like, believe in us in the future. In the future, we'll do well. An average return on invested capital is quite good. EA, when they take your money in order to invest it, they manage to make a very good profit on it, pretty much. Roblox, I mean, they're a growing company. They need to take some losses before they start rolling in the big Robux. I'm going to buy EA stock. And not just a small amount, but 4 shares of EA. That's a $600 investment. It is a position that I do hold in my personal portfolio, and one of the game companies that I think is quite undervalued, especially when you compare it to Roblox. So there you have it, some aggressive buying of shares even before my deposit hits the account. So I like the stocks I'm holding right now because actually EA, Alibaba, Intel, and Microsoft, they're actually all companies that I hold in my personal portfolio right now. Intel, one that I recently added on to my personal portfolio, and Alibaba has been slaying, even though I bought in at a relative high. I bought in 156, which is after it had run up on that day. But hey, kept going overnight and into Monday. Hooray. Game companies are one of my areas of expertise, I would consider, as a gamer my entire life. So it was fun looking into Roblox, and I also had a lot of fun looking into EA when I was doing my personal research. It's entirely possible that with that tease, EA will be a stock that's requested to be reviewed. The next week is up to you, YouTube, on what stock to review. Leave your comments below. And after that, every other week is Patreon. Thank you again to those of you who subscribed on Patreon, giving the Value Town the funds in order to invest in these stocks.